Hi guys, I hope everyone's doing well. It's Ash here. So I just wanted to introduce myself. So my name is Ash. I've been trading full time for about 3 years now, and in total been trading for about 6 years. So I started my journey trading smart money concepts, as a lot of you already have. Started trading smart money concepts, and then slowly I kind of just ventured into auction market theory and order flow. And what this kind of this is basically a trading strategy where you kind of use something called level 2 data, which concepts, and then order flow data. So order flow data is basically live. So all the CME products are through a centralized. It's all centralized. So all the buy and sell orders come through one centralized exchange, and you can have a data feed where you get access to that. So with futures, you can kind of basically see beyond your candlesticks. You can see the live order flow. You can see how many buyers and sellers are interacting at each price level. So that's something that I started venturing into. And then I started using auction market theory, which is using things like volume profile, market profile. Some of you might not know what it is, but we're going to kind of talk about all of this in depth today. So let's just kind of get started. So what auction market theory is, it is basically a principle of price forming a balance, deviating away from that balance, and then returning to that balance, right? So essentially what price will do is it will form a balance somewhere, and then it will break out of that balance, so you can identify that balance zone there, right? Some people call it a range, same thing. And then it will break out of that range, and then it will return to a range of the past. Let's say if price done something like this and then came down, right? You would have this range here, and when we break out of this range, this is showing you that there's strength in the market. So when price leaves one range, it's going to head to the previous range. Now, what we use things like volume profile and market profile for is to identify and actually visualize where these ranges are. So for example, if you had price that did something like this, a volume profile, what volume profile does, it marks it marks on a profile anytime there was a transaction of how many contracts. So if you had one contract traded, there will just be a dot, 1 1 1. Then if you have 2 2 2 3 3 3, then it starts building out, and then it will start looking something like this, right? Like you see above, it will build out a profile of how much volume has traded at these levels, right? So I'll just show you. Some of you know what it is, so I won't waste too much time. This is essentially what it is. So this is telling you this is where the majority of volume traded around this area, right? So if you had a volume profile of something like this, right, it's going to look something like this. So you're going to have a nice balance here, so that will be identified with like a decent bell curve. Then you have this imbalance where you can see price just traded quickly through. So that will show on the volume profile as an area that just got traded through. Then you'll have a nice thick balance range where we had a lot of price acceptance. Now areas where we have consolidation, acceptance, ranging, these are areas where value will build up, right? Now the best thing for me about volume profile is that we can easily identify the imbalances. Where are the edges of this balance, right? The edges here. So can use these as areas to trade from. When we break, we retest this area and we go long. And if we come back into an area of balance, let's say price is trading towards this area. If we're trading towards and we start accepting inside, I will wait for price to come up, and I will look to short from the edge of that distribution, right? So what I'll do is we'll kind of just look at this now at an actual volume profile chart and kind of put it all together. Now I use different tools, but today we're just going to cover market profile and volume profile. So I use things like depth of market. So you can see here all the live orders. This is NQ, NASDAQ. So I can see all the limit orders, all the market orders, where price has traded previously, right? Where the heavy volume areas are. And I can see the live orders coming in here and now, right? And I've also got time and sales. This one here, which is showing me the live orders coming in, right? As they're coming in, and this highlights where the sort of large orders are coming in, right? So now you can see them all coming in real time, right? So this is that. Then I use a footprint chart, which is basically candlesticks. So this is a footprint chart. So these are candlesticks. This is not time based, by the way. This is a volume based chart. So it's a 1500 volume based chart. So this shows me exactly at each candlestick. Right, let me just zoom in. So we're going to talk. So I'm doing these shows, by the way, every week. So every Tuesday, same time. If you do want to see more content, drop me a follow on Instagram. The link is in the description. I'm also on Twitter. I post every day. I post my live trades. I do live trading as well with my community, so you can go ahead and check that out. But anyway, so this is a footprint chart. This is a candlestick. This is a volume profile here, and this is a volume profile on this side where this gray area is. So I can see how many contracts were bought and sold at each price level, and I can use these delta profiles to identify where was the heavy selling. I'll just do a quick example for you now, right? We won't spend too much time on footprint charts, but I'll just show you what an imbalance actually looks like and how you can identify it, right? And we're going to come onto this next week and the week after, and I'm doing this every week now, right? So remember I was talking about imbalances in volume, right? Where price just kind of trades through very quickly. So this is a good example. So here you can see this is a volume profile. So here you can see we had some nice volume built up here. However, in this candle, we had a lot of volume here by looking at the volume profile, but look how thin this bit is. What that's telling you is that price quickly traded through this area. So this is what ICT traders call a fair value gap, but you don't know what a fair value gap is unless you actually look behind the candle. So here is where there was imbalance, right? In this area here, not here. Why? Because there was high volume that traded here. So I'm not interested in that area, right? Now, when price comes down and comes back into this area, you can see what happened. There was a lot of buying volume here, and this is buying delta. So that means there was a lot, and we're going to come into this later, so don't get confused. But here you can see a lot of buying volume. But if there's a lot of buying volume, why hasn't price been able to trade outside of this balance? The reason why is because these buyers are being absorbed by passive sellers, or also known as wholesale sellers, right? And we're going to come onto this in the next 2 weeks, in the next week or so. We're going to talk about how liquidity works. So there are limit orders at every single price level, above and below price, right? So Tony Flair, this is a candlestick chart I'm looking at. These are candlesticks, right? So how the market works is there's limit orders at every price level. So for price to move up, an aggressive buyer has to lift the resting sell limit orders at every price level. Let's just say you've got sell limit orders at this price, this price, this price, this price. Let's say you have 10 here, 15, 20, right? And you'll see this on a depth of market, right? On a depth of market, it will show you how many limit orders at each price level. Here you've got the sell limits and the buy limits. So for price to move up, a buyer has to remove all these orders and lift them, an aggressive buyer. So when you see a scenario of when you have so much aggressive buying like this, but price can't move up, what that's telling you is that there is a wall of sell limits here where the supply of sell limits is outweighing the demand of buying, right? But this footprint chart only shows you, the market orders, right? So this won't show you limit orders being filled. It shows you how many aggressive buyers and sellers there are. So when you can see loads of aggressive buyers but no follow through out of this imbalance, it's telling you that there's loads of passive sell limit orders sitting there. And the same concept applies for volume profile, right? So with this volume profile, the reason why I use this is because I like to identify these areas of imbalance. You see this area where there was low imbalance here? Look what price did the next day. It came up into that area and we shorted and came all the way down, right? So you can use this to actually identify where are the low volume areas. Now, we'll just kind of talk about some of the concepts of the characteristics, should I say, of a volume profile, right? So just to kind of touch on that again. So you have a distribution, right? Now what distributions are, it's these high volume nodes, right? And these high volume nodes are essentially price ranges. Like if I highlight this, you can see that there was a mini range here, right? That was the top of the range. You see where we had that candle, where we had this wick rejection, right? So that was the edge of that range. We came back in and we touched that same area, right? So this, here you have a balanced range, and that is identified by this distribution, right? Now here you have this distribution, right? And this is identified by a price range, because what happened? Price came in, traded down, traded up, traded down into it and up, right? So this is a price range. Yes, price broke out, but this is what's so good about volume profile, right? Price did break out of this range. You see this range that we had here. Price broke out, as you can see here, but it broke out on very thin volume, right? So when you see that areas of thin volume where we had a sharp price rejection, you know that the next time we come back, what is likely to happen? We're likely to get a correction. And what happened? This area of low volume held a support when price came back down and we came up. For you guys that are asking in the chat, this is called a volume profile, right? If you guys want to know more, I do have lots of content on my Instagram. In the description of this video, you can follow me on Instagram and on Twitter. I post loads of content. I even do live trading every day with my community using these tools, right? So let's just kind of continue on that. So you have these, it shows you where balance is, right? And then these areas, these pink areas, this is called a point of control, right? Now this tells you at what price was the most amount of contracts traded, right? So this helps me understand acceptance and rejection, right? And we're going to come on to that in the next couple of minutes, how we can identify sort of acceptance and rejection. But let's just kind of touch on more examples on how we actually use this, right? So we'll just we'll do some examples of some trades that I took. Right, so here's a good example. So this trade I took on Thursday. Sorry, this day here, right? So what I can see is, right, and you can tell this without even looking at volume profile, you can see that price is trading nicely inside of this range, right? Now what I can see here, and this is what is good about volume profile, is at the lows, right, you have these before I just do this, let me just so I'm just doing NASDAQ at the moment. We can do gold another day, but this volume profile will apply to any market, right? Anywhere that picks up volume, you'll be able to apply a volume profile. So anyway, you have what's called these gray lines here, right? The ones here, these ones here, these ones here. So like this is the point of control where the most volume traded. These areas is where 70% of the value of the volume traded for the day. So inside this area is where 70% of the volume for this specific day has traded, right? Now this isn't really too useful for me in terms of trading off. The only times I use a value area high and low is when we have a balance, and you can see here we had this edge of this distribution, right? We had the edge here. Whoops, sorry. So I like to use these only when we are at a balanced bell curve. So we have the edge, which is previous resistance. So when price came up to it again, we took a short. So now I'll tell you how to actually use this to find your entries, right? So the good thing about volume profile, I can see the areas where there was very little volume. So you can see here at these lows, there was very little volume traded and price rejected. And you can see the same thing here and the same thing here. So we had a lot of rejection around this area. So this is what you call a cumulative volume profile. So this profile here is a whole collection of all these days here combined into one, right? The indicator is called market volume profile, for those asking. Volume profile, right? So this is how I look at to get my entries. Now I only trade the New York session, right? I don't trade London, I don't trade Asia, right? But you can use this to trade any session. So coming into the New York session, right, which was here. Now I'm looking at this, seeing that there was low volume here where price had a sharp rejection. So I'm not really expecting price to break lower from here because there was low volume here, right? Now this is what's called a delta profile, right? And I have tons more content on my Instagram for this, guys. So don't just think that this is only one video. I've got tons more. So this delta profile is the net difference between buyers and sellers. Now, what this is showing me here, right? I can see here at this area of rejection, there was a lot of selling happening here. But look what happened. There was selling, but price rejected and went the other way. So like I just said 5 minutes ago, what happened? These sellers got absorbed by wholesale passive buyers, right? So there was a lot of aggressive market sellers, but there was a lot of resting buy limit orders, and the supply of buy limit orders outweighed the demand of sellers, right? So when I'm looking at my entries now, looking to plot my entries, I know that sellers have got trapped here, right? If I just get my draw my rectangle, I know sellers got trapped here, and it's at the edge of this volume distribution, right? And how you can identify where the edges of volume are, look back and see, does price hold this support and resistance? So if I'm marking at this zone, I want to look back and see, does price respect this area? Yes, it does here, once, twice, 3 times, again. And I can see these trap sellers. So when price comes back into this area, I'm looking to get long from here. And this is one of the tools I use called a VWAP, but it's a VWAP with what's called standard deviation bands, right? So this is what you call a VWAP, right? I'm not SMC or ICT. I'm what you call an order flow trader. So we look at real life order flow orders from the centralized futures exchange, right? So NASDAQ futures, the centralized exchange is called the CME. So I have a live data feed where I have things like time and sales. If I just get my time and sales, so I have a live data feed where I can see all these orders that are coming in real time here, right? Your bids and your asks, which are your sell contracts, your buy contracts. So I have a data feed that brings these in real time, right? I also have a footprint chart and a depth of market. This is a depth of market where you can see the limit orders happening in real time, right? So anyway, so I've marked out this zone. Now, this is a what you call a VWAP, which stands for volume weighted average price. So this tells you, so this white line here is your VWAP. So this is where the most contracts have traded based on the mean, your average, right? So now when VWAP is flat, this is telling me that price is in a rotation, right? So we had this long liquidation in Asia, but then in London, we created what's called a range, or I call it a balance, right? Now, when you're trading this, you never want to trade from the middle, because that's just stupid, right? Where do you want to trade? You want to trade from the edges of this balance zone, right? Now, what these candlesticks do is, this is my software called Sierra Chart. These are my own charts, right? These red candles, they highlight where there's extreme selling. So this will look at the actual real life order flow, and it will tell me where there's aggressive selling. So I know if I'm seeing aggressive selling at the edges of a balance range, at the edges of a range, what is that telling me? Is that these sellers are being absorbed by wholesale buyers. So I know when I see this, it's an indication to get long. And we're going to come onto this next week or the week after. We're going to talk about VWAP and what these deviation bands are. You see these little deviations, offset bands of VWAP. We're going to talk about what these are, but these are basically extremes of value, right? So when price is in a rotation, you want to be trading in these areas here. You want to be trading in these areas here and these areas here. And what gave me confidence to take this long was I can see aggressive selling getting absorbed. And the way you have to think about this is you have to think about this as a real life market auction. If we have so much aggressive selling and there's no buyers standing in the way of those sellers, price should just continue all the way down, right? Because the way the market is, it's a two-way auction, right? You have buyers at one price and sellers at one price. So I'll just show you the depth of market. Just very quickly, we'll touch on this, right? So this is a depth of market. So on this column here, where you see these red in the red, these are your sell limit orders and these are your buy limit orders. Now for price to move up, an aggressive buyer has to lift all of these limit orders, and then price will move up to the next tick, to the next tick, to the next tick, right? Now for price to move down, aggressive sellers will have to lift the bids that are at this level, right? Called the bids and offers. So when you see so much aggressive selling, price should move down only if there are no buyers standing in their way. So when you have a lot of aggressive selling, but you have loads of what we call passive buyers, buy limit orders, this is what's called absorption, is where all these sellers are being absorbed by wholesale passive buyers. So you got to think of it. Think of this. If there are 200 limit orders here, right? But there's only 500 buyers coming in. Sorry, 500 sellers coming into this area. Sellers are not going to be able to break this zone because then they're being outnumbered by the supply. So that's what absorption is, right? So this chart is identifying where the heavy selling is. So where there's heavy selling and I can see there's no follow through, this is telling me that there's loads of passive buyers sitting here, and eventually what happens is sellers run out of steam and then the aggressive buyers come in and take price higher. So it's very important to understand that passive limit orders do not move price. What moves price is aggressive market participants. So you know when you're trading, when you hit market, like on TradingView for example, if you want to execute a trade, you can either execute it from a buy limit order, a sell limit, or you press what's called buy by market, sell by market. So those aggressive market executors can move price, right? Limit orders cannot move price. So that's just the concept of Orderflow. For you asking what this software is, it's called Sierra Chart. Sierra, SIERRA, Sierra Charts. Like I said, if you want to follow me on Instagram, hit me up. I can send you some more details. My Instagram is in the description of this video. So anyway, let's get back to what we were talking about. So we can see we're at the edge of a balanced distribution, right? So I can see that there's absorption here. We can see the aggressive selling like I just showed you. So that is my indication to get long. If you're asking for this trading platform, it's called Sierra Chart. SIERRA chart, Sierra Chart, right? If I said follow me on Instagram, links in the description for more information. Sierra, SIERRA, right? So now we'll come on to some more examples of some trades that I've taken, right? So this was quite a nice day where we broke outside of balance, right? So let me just kind of visualize this for you a little bit better. So this is how profile works. So let's say price is doing something like this and trading like this, and it goes up and then it forms something like this. So how a volume profile would look for this, you would have a lot of value built up here, some low volume here, some profile building here, right? Oops, sorry. Right, say for example, so if I was to draw a volume profile this, you would see a lot of value being built here, some imbalance here, some value here, some imbalance here, and some value here. Now what you want to identify is these low volume areas here, because what price will do, these areas of low volume, it will bounce between these areas, these imbalances. So price will break through, retest the imbalance, break through, retest the imbalance. So you know when price kind of comes down here and you want to look for a short, you should look for price to retest this low volume node. That's essentially what the market is, right? Now let's look at this in real time rather than my drawing. Low volume areas are basically areas of imbalance, right? So let me just give you an example. So we can see here, right, on this day, you can see on two different profiles. So here we've got the cumulative. So this profile here is everything in this combined. And then these ones are daily, right? So this is 1 day's worth of action, 2 days, 3 days. So this is a 30-minute candlestick chart, right? Now, let me show you how this works. So here you can see we had a gap of, this is called a low volume node, right? So we had a gap here, right? And if you look at the previous day, whoops, sorry. If you look at the previous day, we also had, you see this low volume here? So there was an area of imbalance here, right? Now look what happened when price pulled back up into this area. There's one or two things that are going to happen. We either trade up and go short, or we go up, break, retest, and long, right? Very simple. Now look what has happened following this. So I'm going to highlight this area, right? So we had this area of imbalance, right? Now look what happens as price comes up, right? We rejected, sorry, let me just go back. I'm just going to highlight it with my green rectangle. Right? Now look what happened when price came up. We tapped into it and price sold off and came all the way down, right? So this is what you want to do. You want to look at these low volume areas to identify previous areas of balance, right? And how you know this is an area of imbalance. If I just delete this, right? Remember I was talking earlier about identifying ranges. So here we've got the edge of this range, right? So we have a distribution here and a distribution here, and this edge is where price rejected. So here you can see the candle wick rejection, and we broke up, and then when we came back up we rejected again. So somewhere in this area is low volume. That's exactly what an imbalance is, and you use volume profile to help you identify. So put it in ICT terms. ICT talks about fair value gaps, but how do you know where the fair value gap is? You identify it from this low volume node. This is how you identify what a fair value gap is. Hopefully now you guys can kind of understand. So let's kind of look at some real life trading examples now. This indicator volume profile is available on TradingView, yes, but you don't have access to things like market profile. The indicator, as I said, is called volume profile. Now another tool that I like to use is called market profile, and we're going to come onto this next week, where we're going to talk about inventory. So this is what you call a market profile chart. So as I said, volume profile is based on volume. Market profile is purely based on time, right? So what this stands for, this is called a market profile TPO. It stands for time, price, opportunity, right? Now this, so volume profile is all about volume. It transacts volume. Market profile is purely based on time. So this market profile chart, as you can see here, these are 30-minute blocks, and what these do is these print one little block every time price trades into a price range, right? And then it collects it and it compresses it into what this profile shape. Now these have the same characteristics as a volume profile. You have your value area low, your blue, these blue lines. So this is where 70% of time was spent, and this orange one is the point of control. This means where time spent the most value. And what we use these for is we use this to identify where is value, where are the edges of these distributions, right? Now a distribution, as I said, are these high volume areas. This is a distribution, this is a distribution, this is a distribution. Now what price does is it trades off these low volume areas. So price will come into here, it will bounce off the low volume, come back inside and trade here, bounce, reject and retest and come off into here. So these low volume areas are support and resistance zones. So if you look back on time, right, you can see we rejected here, came up, rejected, came up, rejected, and price is rejecting inside these areas of low volume. This is where price is rejecting from. Hopefully this is slowly starting to make sense. So we're going to talk about market profile next week. So let's just continue on volume profile for now. I've been trading for 6 years now. and I've been trading full time for a living for 3 years. Right, so let's kind of look at some we'll do some more trading examples now, right? Now remember what I said, right? Price creates these high volume areas, right? And these are like mini balance zones. So these, where you see this point of control, this is telling you for this day, this was the price that had the most traded volume. And remember I was saying what price does, it breaks from one area of value to another, right? So what price will do is it will form a value like a balance like this, then it will break out of this range and go higher. But where will it target? It will target a previous range. Let's say price done something like this. So price created this range here, we traded lower, formed another range, and broke out of that range. Now when we break out of that range, where is price going to go? It's going to go towards the previous range. Why is that? Because that's where volume was transacting. Price is trying to follow previous areas of volume, right? So let's do an trading example now. And don't worry about too much about execution, because I'm doing these videos every week on a Tuesday, right? So every week I'm gonna kind of give you the entire context of this strategy, and then towards the end you're gonna understand how to execute. Tony Flair in the comments, I do offer mentorship. I have a Discord, and in my Discord I have a trading course where you can go through my course. And I have live trading where I trade live every day. You can watch my trades live. So anyway, let's do a trading example of this day. So we can see here what price is currently doing is price is currently in this balance, right? We're in this balance. And how can you identify that? Look at this distribution. Price is stuck in this area, right? Now, as I said, I only trade the RTH session, right? So I trade the 9:30 New York Open, right? So 9 o'clock is here. So this is where I'm doing my analysis. So you can see now price is coming into the top of this range, right? And we want to identify this area where there's low volume. Now, remember what I said earlier. How can you be sure that you are marking out the right zone? And how you can be sure that you're marking out the right zone is by making sure price has rejected this level. Has price rejected this level previously? Look, yes, we had rejections from here, rejection here, rejection here, rejection here. So this is the edge of my value area, right? So when price breaks out of this and rejects it, where is price going to go towards? It's going to go towards this area where we had the point of control, which means this is the area where the most amount of contracts has traded, right? This is going to be your target, because what this means is buyers and sellers were happy to transact at this price. So when we go away from a balance, we are going to come back to another area of balance. Very simple. Now, what I do is, so this was the just before the New York session opened. So I'm looking now for a very simple trade up here and go long, and I want to take my entries from somewhere in here, right? For you asking for my Instagram, look in the description of this video. My Instagram is there. My Instagram is called AMTOF Group. It's in the description to this video, right? So now let's look at how I would trade this. So this was on the 9th, on the Wednesday. So I'll look at my VWAP chart now, right? So we'll go to the 9th, and I'm going to show you the footprint chart as well. So before the market opened, right? So the market's kind of opening here. Now what I use VWAP for is it helps me identify the market is in a trend. So when VWAP is you can see this VWAP is slanting upwards and price is holding above one standard deviation like this. This is telling me that we are in a bullish condition. Now, if you can see here, we have the Asia range here, right? Now, pre-market, price rejected Asia, and can you see here, we've retested Asia high to the pip and continued higher. So what that's telling me is that is telling me we are in a bullish condition, right? So I'm just going to zoom in a little bit here. So you can see these candles, right? We've retested the edge of this Asia high. VWAP's trading upwards, right? We're in a bullish condition here. So I know now what's going to happen is we're going to break out of this range and trade into this area. So if I look at the footprint chart now, so this was the 9th, I believe, right? So 9th at 9:30. Right, so as we come into this area, right? So this is now the 9:30 open. So I can see, looking at my footprint chart, there's a lot of aggressive buying that is happening at this area, right? And this is where you can really identify what ICT calls a fair value gap, right? So this is some real source here, right? Look what I'm about to show you. And I have tons of more of this content on my Instagram. So go ahead, follow my Instagram. You can join my Discord community and we can trade live. So this is a volume. So these are candlesticks, right? But you can see inside the candlesticks. So you can see here, this is a volume profile. So we had a lot of volume traded here, a lot of buying volume and a lot of buying delta, which means there's a lot of difference between buyers and sellers here. This is a candlestick chart. It's not a time frame. This is 1500 volume. So what this does is it prints a new candlestick every time there was 1500 contracts traded, right? So anyway, so this is a volume profile. So I can see here that there was an area of imbalance here, right? There was an area of imbalance here. Look at where there's low volume. So here there's heavy volume. This is not an imbalance. Here you've got a small imbalance here, right? Now what happened is, so this is the trade that I took. So price created this area of imbalance, right? Let me just draw it again. This area where there was low volume. So you see here, there's low volume here, low volume here. So this is where you enter the market. So what's happened is price has quickly traded through this area and it is retested. So you look at the volume profile. You've got heavy volume here. This is your imbalance area. Can you see that? Right? This is your area of imbalance right here. Right? You can identify this looking at this volume profile. So there was a lot of volume here. I'm not interested in this. I'm interested in this. And look what happened. Price traded through and we've retested here. And this is where you get long. Right? And this is where it gets really interesting now because you can actually see inside the candlestick. So let's zoom in and see what happened inside this area. So you can see here so the red and the blue is buying and selling. So at this area we created this imbalance, right? We'll just draw it out again. From this low volume you can see the imbalance here, right? In this area we had a lot of aggressive selling into this area, and you can look at this sell side delta, right? So this delta is the difference between buyers and sellers. So where you have numbers here, if I just zoom in, so you have numbers here like 22, 22, 14, 16. That means there was 22 more sellers than buyers at this level. So we had aggressive selling into this area, and you can see by the delta of the candle, right? This candle had a negative 300 delta, right? That means in this candle, I told you this is not a time frame. This is not a time frame. This is a volume-based chart. This is not time period. This is not 1 minute, 2 minute. It's volume. Anytime there was 1500 volume traded, it prints another candlestick, right? So anyway, what you can see here is you can see that there was aggressive selling, 206 difference here into this area, right? What does that mean? As I said before, it means that there was passive wholesale buyers eating up these sell orders. So this is what you call absorption, right? So this is where you want to get long. Like I said earlier, right? Price will create a balance. It will create a balance range, something like this, and then it will break outside of that range, retest and come higher. So what's happened here is prices traded created an imbalance, and it has come back and testing this area of imbalance where there's low volume. So it's came down and retested this area, and we've seen heavy selling being absorbed by wholesale passive buys, and this is your entry to go long, right? And we're gonna come, don't worry if it's this confusing now. In the next coming weeks, we're gonna come onto this, right? So you can see that price is really bullish here. So this is where you take your entry, right? And your target is going to be this area here. So as we come up, you can see now price went all the way up, and we hit our target. We would have hit our target coming into this area, right? So let's do few more examples now, just so you can kind of understand how this sort of stuff works. Right, so we've already done that example. Right, this is actually a good example here. Right, so here's a good example, right? So, yes, very simple, Tony, in the comments. You want to trade from these low volume areas, and these low volume areas at the edges of distributions, right? So, like we said, how you can kind of identify if you're highlighting the right area. You might think, am I highlighting the right area? So how you can highlight the edge of a distribution is you look back and see, does it hold? Is price respecting this area from the past, right? So let's do another example. So I can see here we had a nice balanced distribution here, right? So price had a nice sort of balance here, right? Now if I look at the cumulative volume profile, I can see that the edge of this balance was somewhere around here, right? Now if I just mark this out, right? So we had this kind of edge of this distribution here, right? Where you can also see price respected very well this area, right? And price is making lower lows at the moment. You see this? Lower lows, lower highs as well. Highs are getting lower. So in this scenario, you probably want to look for shorts. Now you can see here we had these wicks here. So this is a good area of support. We also come into the previous day. If you look at this daily volume profile, we come into the value area high. And remember where I was talking about low volume areas? You can see there was a lot of rejection from this area, right? So when we're looking to trade, right, so I trade the New York Open, right? So 9 o'clock is here, right? So this is my area. Now you can see here we clearly had this flat ledge here, right? We had this flat area of volume. So this is where I want to look for my entry. So the key factor to recognize is where are the low volume areas, the edges of this distribution, right? That's your key factor, right? So now when the market opens at 9:30, right, you would have seen here, this is your kind of area to entry. Now we're going to do more order flow stuff, so don't worry if I don't talk about it now, but we just done one example and you looked at a footprint chart. We're going to do plenty more, but I just want you to understand auction market theory, right? Price is inside a balance, and we trade from these edges, from these low volume nodes, right? So what price does, you use these as support levels, so break, retest, come higher, or price will come up, reject, and we take a short from here, right? Or you wait for the break, retest, go higher, right? Because that's essentially what price does, right? Let's say, for example, price does this, it forms a balance range, comes higher, breaks through, retests, and come higher, right? A volume profile of this would look something like this, right? Let me just do this on a blank canvas, right? So if I was to draw a volume profile like this, it would look something like this. You'd have a high volume area, some low volume, some high volume here, and then some low volume here and high volume here. So these are your edges of balance, right? So you know when price comes up here and we trade and we break, when we retest, where are we going to look to enter sell position? From this low volume area. That is identifying an imbalance. So this is essentially what I do, rinse and repeat every single day, right? So I'll just show you, we'll do a couple more trade examples and then we'll call it a day here, and then I'll be live next week, Tuesday. So here's a good example right on the previous day, right? So if I'm trading New York session, so this is pre-market here, right? So if I look at the last day, I can see that we clearly had, can you see this here, this area of imbalance? And we had some area here, some areas here, right? But you want to look for where price kind of respected. Now this is where you have to really fine tune your eyes. Can you see here, we had some wick rejection here. Can you see that, right? Price has rejected that area. Then when we came back, we rejected again in this area, and again and again, right? So where I want to look to highlight my zones is in this area here. Right? Maybe slightly lower, because if you look at the yesterdays, we had a little volume gap in here. So somewhere here is where I want to look to trade from, right? Now price is going to do either one or two things. We're either going to trade into previous, you see that area there, the point of control, right? Or you can use this, we've got another high volume node here. So these are your kind of targets. So high volume nodes like this, they act as a price magnet, right? Because this is previous areas where price has traded, right? So this was on the 7th of July. So if I go to my VWAP chart, let's just go back to the 7th of July. Right, so you can see here, right? Let me just take off this volume profile. Right, so you can see here, what is price doing right now? It's ranging, right? So the New York Open is somewhere here, right? So the market opened here, so we wait for price to come up here and we take a short from here, right? And you can hold it all the way. But what's happening? So VWAP is flat at the moment, right? This white line is flat. We are in a price range. So where do you want to trade from? You don't want to trade from the middle of the range. You want to trade from the upper part of the range, right? So you use these deviation bands to trade from the extremes, right? And you could also have taken a long position from here up to here. You can play both sides of the range. And what you do is you use a footprint chart to identify when these imbalances happen. Now, another very important aspect of volume profile, which we're going to talk about now, is acceptance and rejection, right? So the reason why this is important is because it tells you what price is most likely going to do. So let me just, this is going to be the last part for this session today, and then we'll be back next week, right? So what you can see happen here, you've got two price ranges. You've got a range here where price is chopped in and out, and you've got another range here where price traded inside this range, right? And in between there, you have your low volume area, right, which is here, this area here, which acts as support and resistance, right? Now, what you can use this volume profile for is to understand what buyers and sellers want to do, right? So I'll just give you an example. Now, you see when we're trading here, a lot of traders will see this zone. You see where this area is, they will see this as weakness because price has tested this area multiple times. Once, twice, it broke through, tested again, tested again, tested again, tested again. Now, a lot of traders would see this and see this as weakness and think price is eventually going to break in this next day and come down, right? But this is what volume is telling us that it's not, right? Because let's say you have this distribution here, this range, right? And then you have this range here, right? Just identify these ranges. Now, what volume is telling us, right? As we came into the lower part of this range, you can see there was very little volume traded, right? And then on the next day, again, very little volume traded, and the point of control stayed in this range here, right? So we had this range. When we came outside of this range, there was little volume here, very little volume. On the second attempt, very little volume. Third attempt, look what happened, very little volume. So this is telling us that price is not accepting inside this lower range. It's not accepting it because there's low volume. So I am not anticipating, so on this day, right, this next day, let's say we were playing this day here, I'm not anticipating a break inside here because it's showing me there's low volume. So what then happens on the next day? Price goes all the way up, right? Because there's low volume in this area. Now, if there was heavy volume in this area, what I would want for price to do, you look at this, you see this low volume gap here, this area. If we had printed heavy volume in this area, then I would expect price to break. Where am I going to short from? Look to retest this area, and this is where I'm going to short. But I'm not taking this short position because I'm not seeing any acceptance by looking at the volume profile, right? Now, let me show you the opposite example for another day. So here you had what's called excess, very thin volume. Now let's look at the opposite scenario. Now here, can you see we had very thick volume at the highs, right? Whoops. Now this is where you're going to really understand what's going on. So here we had thin volume at the lows, but very thick volume at the highs, right? Thin volume here, thick volume here, right? So when price trades, so you can see price came lower. When we trade lower, where do you think price is going to go, right? Is price likely to come all the way here where there, whoops, sorry. Is price going to come into this area where there was low volume, or is it likely to come towards where there was high volume, right? This is showing me that there's clearly acceptance in this area. Now look what happens, right? Look at this here. Here you can clearly see we have the edge of this distribution, this low volume node, right? It acts as resistance, 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 right? But it's telling me there's heavy volume here, right? And on this side, there's low volume here, low volume. But this has got the point of control, which means there's heavy volume here. So it's very likely price is going to break through this area and come higher. And look what happened, right? If I fast forward it, we broke, retested, and came higher. Can you see this rejection now, right? Look where price rejected, right? Remember I told you, we trade inside these areas of high volume, we break and retest and come higher, right? So look what's happened here. Right? So if we mark the edge of this distribution, look at this edge of this distribution, low volume area, it held a support resistance here, here, here. And when we break, look at the retest. If I zoom in, you see the candle came right there and broke all the way higher. So this is essentially exactly what auction market theory is. You want to identify where your areas of balance are and you want to trade off those areas. And then what you do is, once you identify these areas, you look at the footprint chart, right? Where you can then see inside the candlestick and see where are buyers and sellers transacting, where is real life imbalances, and where is momentum, and where is trap sellers, trap buyers. And that is essentially what you want to do every single day, rinse and repeat. So that's going to be it for today. We're coming up to an hour. So I'm going to do these webinars every single Tuesday at 5:30 UK time. I'm seeing you guys in the comments gained a big understanding. I'm really glad that this has been an eye-opener for you. Drop me a follow on Instagram, guys, and I post so much more content there. I've got a Discord channel there as well. So yeah, hit me up there for more stuff, and I'll see you guys next week, Tuesday, 5 p.m. UK time. Take care, guys. Have a great day.